Hey everyone, this is Simon, your crypto CPA from the Lone Star State here at Octave CPA. But again, even though I am speaking from the Lone Star State, I am helping everyone all over the US and all over the world. And thank you so much for contacting us. Thank you so much for putting your faith and trust in us. And thank you so much for allowing us to serve you, to give you even an answer, for allowing us to be trusted in this space. Why? Because this space is an area where the rules are few, the applications are a million, but knowing what these rules are is paramount. So if you're not embedded in crypto taxes day in, day out, then you're not going to be a master of them. Then you're just going to be a jack of all trades, a master of none. I've been blessed that my business partners here, they've been handling the entire firm themselves, and then that is why that I'm able to focus just on the cryptocurrency area, and that is why me and my team have been able to excel in this area, is because of the flexibility that has been allowed to us. So thank you so much to everyone, including my partners here. And so in today's video, what I want to do is I want to go back to the basics of, so anytime someone sets up a cryptocurrency tax account anywhere, most of the time, even when you're on ramping through a centralized exchange or even a decentralized exchange, if you have some KYC there, they're going to ask you for accounting methodology. Which accounting method do you want to pick? FIFO, LIFO, HIFO. Some will say average, but again, as a US taxpayer, you can no longer use average. It's out of the question, no discussions. The IRS, um, it was the 2024 dash, I forget, the notice that came out where wallet-based accounting was established. And again, you know that in for us, the average does not is not applicable. Either we're using FIFO, LIFO, HIFO. Basically, IRS says FIFO or specific identification. Specific identification means that from your inventory of crypto, you're picking and choosing which ones you want to sell, given that they're in a certain wallet. You can no longer mix and match like we used to back in the day for universal accounting. Now it's wallet to wallet accounting, and in that wallet accounting, what are you picking? FIFO, LIFO, or HIFO? And um, and I'll tell you which ones benefit you the most, which ones will benefit you the least. But again, the answer lies as to what kind of investor you are. What is your long-term strategy? What is your short-term strategy? And I'm going to give you a pro tip before we start this discussion today. Is if I were you, I would pick. I would just get multiple wallets. In the world of cryptocurrency and blockchain, wallets are free. So get different wallets, and in those wallets, apply different methodologies. For example, one wallet that does spot trading. So if a wallet that does spot trading, I would love to be LIFO. Why? Because it's last in, first out, meaning whatever I purchased the most recent, that's the one that I want to trade. So then it'll keep me close to the current market prices. Otherwise, because if I'm picking crypto that I purchased way long time ago, that would be FIFO. And I will get into all that. That'll be FIFO. But imagine that if I did FIFO, my gains could be so high because it could be so different or so far from when I purchased and when I'm trading now. So if I pick LIFO, last in, first out, I'm opening a position, I'm getting into it, and I'm closing a position. So essentially, if these are short-term trades and they're not months long, they're not perps, and that are going on forever, and you have enough liquidity for you to do that, but then you can certainly pick LIFO. So knowing what you're doing And then bifurcating just means to segregate, separate out your investing activity by wallet. Oh, it will help you so much. So let's get into the actual nitty gritty of all this, and let's tackle these hard topics head on. Because when we tackle hard topics head on, then we can grab them, and we can then have a tax strategy that we can then we can basically control. Otherwise, we're just at the whim of a option that we're picking, and we're at the end we're just picking and choosing options trying to get to a lower tax bill. That's not the right thing to do. So you better start from the start, and then bifurcate your investing strategies, and then pick different accounting methods based on those investing strategies. You'll be a winner. So let's get right to it. So the IRS allows for a specific identification method, like I was just describing. That means that in your inventory of crypto, you can pick and choose which ones you want to sell first in that wallet, one wallet only. Pick and choose which ones you want to sell first, exchange first. So that's specific. So then you can certainly pick FIFO, LIFO, HIFO, because those are all specific identification um, crypto that you're picking, but they just happen to be coming out. For example, FIFO is first in, first out, meaning whatever crypto I purchased first, way back when, or just now, is the one that I will sell first. So imagine you've been purchasing crypto, one, two, three, four, five, and the same crypto. Let's say it's Bitcoin, BTC, 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 BTC. You purchase zero point 0.5 here, zero point 0.1 here, zero point 0.2 here, zero point 0.5 here. Well, which one will you sell first? So based on that, if I pick FIFO, I'll pick the ones that I purchase first that will come out and sell first. And then as I'm going through, I'll be selling all the rest. So most of the time, people, or when we advise clients, picking and choosing the method is always your right. You get to pick and choose. So FIFO is someone that is, if you are a HODLer, someone who's a long-term investor who wants to just invest and forget about it, FIFO would be perfect for you. Why? Because it will give you the long-term capital gains rate if you are more than 1 year. That means 0%, 15%, or 20%. And you need that. Why? Because you can, in short-term capital gains structure, you can easily jump up to 37% or 38%, whatever the case is, and more, depending on the additional tax. So you really need to get to the actual long-term capital gains rate if you have crypto that has appreciated significantly, right? So then otherwise you're going to be paying massive amounts in taxes. So FIFO is perfect for folks who are buy and forget. Also, LIFO could be perfect for those too. For example, imagine, well, LIFO means last in, first out. But if you have a period where you did not make any purchases, let's say you got into crypto 2017, you've been purchasing 2018, 19, 20, 21, then you took a break for 2, 3 years. And now you're thinking about, well, which ones do I want to, which methodology should I pick so I can have a lower tax bill? Well, think about this. You've had 3 to 4 years of purchasing history, then you've had 3 to 4 years of a gap. So most of your crypto that comes out, regardless of FIFO or LIFO, will be long term, right? Well, if that is true, then I could pick LIFO or FIFO. But then if there's a significant differentiation of the initial crypto that you purchase and at the time when you paused purchasing, then you ought to pick, okay, well, which one can I afford a a tax bill that I can pay? Because you also need to understand, when you get a capital gain or a loss, there's a tax liability or reduction associated with it, right? So you need to also for a lot of folks that are into crypto, they have to liquidate their crypto to pay for these massive amounts of taxes. So if you are someone who still wants to stay in the crypto world while you're getting these taxable events, you also need to understand that you need to pay for that tax bill, and how will you pay for that tax bill at the end of the year is also going to be huge, because we have so many people that are in crypto that are sitting on losing positions and losing tokens, and they can't even liquidate to pay for their crypto for tax liability on the cryptocurrency. So utilizing tax loss harvesting at there is key. But coming back to our position, so there, if I want my tax bill to be as low as possible, then I could still pick LIFO and still have a long-term capital gains rate, and then have my tax bill to be low as possible. So you need to account for multiple things and not just one thing, okay? And so this is something that you should certainly spend time in understanding the methodology, and then using this gem and this tool to then enhance your crypto trading, enhance your tax positions, and really, I mean, I have so many clients that, I mean, we have booked so many losses from tax loss harvesting that they're not going to be paying taxes for maybe at least the next 2 years, at least on the crypto piece, because we've been using the tax code. So you need to use the tax code. The last one is HIFO, high in first out. Well, with HIFO, sure, it will give you a low tax bill in that year, but then you lose that chronological ability to follow your crypto too. But now we do have something called lock mechanisms, locking periods, or data migration. And you need to understand and get a little technical here, because this will be so important. You can apply, you can change FIFO, LIFO, HIFO from period to period, or even within periods, but you need to understand how the data locking works. Okay, let's get to the next slide. Again, I wanted to spend a lot of time here just so I can really, really hone in and speak to some of you that are confused, and maybe by speaking more on this topic and trying to cover most of it, maybe this can help you to also pick a methodology that will favor you, but also gives you the flexibility to change that methodology, and then picking different wallets and putting different methodologies in different wallets can also help you. So I want to give you all these tools, right? So again, by default, by the way, if you don't pick a methodology, it's FIFO. So all your centralized exchanges everywhere, your 1099 DAs, those cost bases that are coming, the ones that are identified by the exchanges, not the ones that are missing, those are also based on your picking of the inventory method or accounting method. So imagine if you pick a wrong method in Coinbase, Kraken, Gemini, eToro, um, all these exchanges, and you're getting these 1099 DAs. And then you're doing your crypto accounting separately too, on on Coinly, on Zen Ledger, on Bitwave, on Awaken, on Netrunner, um, all of them. If you don't have the right tax inventory method here, you will get different cost basis, because then they're liquidating different crypto in their eyes. You're liquidating different crypto in your eyes. So then you're not going to get the same cost basis. You're going to be fiddling with data, and that's just going to cause a mismatch, and it will cause a lot of stress and trouble. So picking the right methodology from the get-go is the biggest thing that can help you out in making sure that you are tax optimized. At the same time, you are well informed in making future crypto trades. All right. Okay, we already know about the safe harbor provisions. So again, now it's all about wallet to wallet, no mixing and matching, ladies and gentlemen, no universal wallet methodology. Okay, now look at this one. And this one, a price is going up linearly. When we say linearly, that just means that let's just say that just going in one direction, right? It's not going up and down like a roller coaster. So as you can see, this price is going up. Let's assume this is an example, okay, that I purchased this random token. I've been purchasing quantity of one at each interval, 1/1/2022, excuse me, July 1st, 2022, January 2023, July 2023, and the price is going up. Now, if I pick FIFO, first in, first out, then I will be liquidating the first few of these first, right? If I pick LIFO, then I'm going backwards. Last in, first out. I'm going this way. I'm going back up. So I'm liquidating these first, right? And if I picked HIFO, had this chart been going up and down like a roller coaster, then it would probably pick the ones that are on top of this roller coaster for me, on the peaks of the roller coaster. That would be the HIFO. So that's how you need to see this, right? And again, here, the green one represents, I just wanted to give you a visual representation, right? Imagine today is, well, today is it's March 16th. So I did this presentation a month back, or no, just 2 weeks back. So on February 24th, imagine if the price was at 300. If I wanted to sell uh, 4 quantity of this random crypto, if I picked FIFO, I would be selling the green ones. If I picked LIFO, I would be selling the yellow ones. And then based on the date, you're looking at the long term, short term, and also the price. And remember, what did I tell you? That if you have a gap of purchasing activity in between, then FIFO and LIFO will yield to a long term capital gains rate. And that in itself will break the logic if you're talking about FIFO and LIFO just for the long term capital gains rate. But then within that, if you are a tiebreaker, then you need to come up with, okay, well, which one is giving me the lower tax bill? Well, is that methodology consistent then in the future? Am I going to be picking LIFO in the future? So if you can answer all those questions, then you can answer this question, that which one should I pick here, LIFO or FIFO? Here is an example of somewhat of a roller coaster of a price, just going up and down. And had we picked HIFO here, ladies and gentlemen, we would be picking the ones that are here, not the ones that are on the beginning of our purchase history or the end of our purchase history, which is here, end, right? The beginning is here, end is here. Rather, we're picking the one that is the highest in the middle. And the middle the highest could have been anywhere, right? It could have been here, it could have been there. But then we're picking the high ones. That is HIFO. Highest in, first out. Meaning the ones that have costed you the most will be the ones that are coming out and being sold or exchanged or swapped first. So this does it. This was our mashup of the entire HIFO, FIFO, LIFO conundrum. And this thing has been confusing taxpayers for such a long time, and especially informed taxpayers that have been doing their own taxes forever, right? So knowing what right accounting methods are in cryptocurrency, this is a biggest layup that you can use to enhance your crypto trading strategy, or simply to have a lower tax bill, but with a um, with a plan in place, rather than just picking and choosing a method haphazardly at the end of the year. Okay, thank you so much. This is Simon, your crypto CPA from the Lone Star State here at Akif CPA, and you can see our email and our phone number. Contact us, and we'll be more than happy to help you out. Thank you.